Get ready for massive shifts in the economy. The average monthly salary for regular workers has skyrocketed due to incentives at Samsung Electronics and SK Hynix following the semiconductor recovery. We are talking about huge wage increases, with bonuses exceeding 25 million won in January and February alone. This is how the giants are rewarding their workforce as the industry rebounds. Next up, stoppage at the most critical choke point in the supply chain could lead to staggering financial losses, forcing an unprecedented showdown between labor demands and corporate strategy. Finally, we look at the wild ride in the tech market. The AI boom is creating a massive gap in stock returns, with semiconductor and memory firms soaring while software stocks are struggling. Find out which companies are leading this surge, like SanDisk, and which ones are facing serious headwinds, and what investors need to watch out for in this volatile landscape. The average monthly salary for regular workers has seen a significant surge, driven by performance incentives at major corporations like Samsung Electronics and SK Hynix, following the recovery in the semiconductor industry. Last year, the average monthly wage reached nearly 10 million won, with bonuses and incentives in January and February of this year exceeding 25 million won. A recent analysis by the Ministry of Employment and Labor's Business Labor Force Survey on the 17th revealed that the average monthly wage per regular worker in the electronic parts, computer, video, audio, and communication equipment manufacturing industry at large workplaces with over 300 employees stood at 25.53 million won as of February this year. This figure followed 25.625 million won in January, with the average holding steady at 25 million won for the second consecutive month. The average is calculated from flat rate pay and excess special pay. This substantial increase is directly attributed to higher bonuses and performance pay resulting from the strong performance of semiconductor giants earlier this year. By February, special benefits constituted 73.4% of total wages, amounting to 18.38 million won. The basic salary and flat rate salary were estimated at 5,829,000 won and 837,000 won, respectively. When compared to the total wage of 8,355,000 won in February last year, this represents a tripling of the wage. The Lunar New Year holiday shift, moving from January last year to February this year, contributed to a particularly large wage growth rate in February. In the broader industry context, the manufacturing sector for coke, briquettes, and petroleum refined products, including oil refining, ranked first with an average wage of 26.576 million won. The financial and insurance-related service industry ranked third, a reversal from its position the previous year. Looking at the annual trend, total wages for large electronic component manufacturers slowed after 2020, decreased in 2024, and then increased last year, with an average of 9,419,000 won. This marks a 13% year-on-year increase. Notably, the average wage increase rate for the manufacturing industry with 300 or more employees was significantly higher at 6.9%, nearly double the general rate. Anticipating further performance improvements from the semiconductor supercycle, wage increases are expected to accelerate. Samsung Electronics' 2025 business report in March indicated that the average employee's salary reached an all-time high of 158 million won, a 21.5% year-on-year increase. Similarly, SK Hynix employees saw their average salary rise by 58.1% to 185 million won, also a record high. However, the report highlights a challenge known as K-shaped polarization, where wages for temporary and daily workers decline, excluding regular employees. Temporary and daily workers experienced a 1.1% decrease, with their average wage falling to 1.717 million won, contrasting with the 19% increase seen among all regular workers, whose average wage reached 5.183 million won in February. The sluggish construction industry is linked to a reduced proportion of higher-wage daily construction workers and an increase in short-term, low-wage employment opportunities. Jusung Engineering, a prominent semiconductor equipment manufacturer, announced Thursday the successful shipment of the world's first atomic layer growth, ALG, manufacturing equipment to a global semiconductor company. This development marks a significant leap forward in semiconductor technology, representing an evolution of existing atomic layer deposition, ALD, equipment designed to dramatically improve process precision. The ALG technology is gaining traction due to its potential to resolve yield degradation issues prevalent in ultrafine semiconductor processes. Unlike traditional ALD equipment, which deposits atomic layers sequentially, ALG equipment enables atoms to bond independently, thereby maintaining density and yield even within the constrained space of a wafer. This capability directly addresses uniformity challenges that often arise during ALD deposition. Industry experts view the adoption of ALG equipment as a critical response to the escalating demand for high-performance semiconductor technology, driven by the rapid expansion of the artificial intelligence (AI) sector. A Jusung Engineering official stated that as AI becomes integrated into daily life, the manufacturing of next-generation transistors featuring high-density vertical stack structures, essential for AI computation, demands stringent uniformity. The company emphasized that their world-first ALG technology provides equipment capable of ensuring uniform thin film growth and deposition, even in these complex vertical stack configurations. Looking ahead, Jusung Engineering anticipates expanding the application of ALG technology beyond the semiconductor industry into areas such as display and solar equipment. Company officials asserted that their focus extends beyond mere manufacturing equipment. They aim to establish new benchmarks and standards for semiconductor technology in the AI era, continually introducing innovative technologies to redefine the global semiconductor, display, and solar manufacturing landscapes. A massive 45,000-person labor strike at Samsung's memory chip plants threatens to derail the ongoing artificial intelligence boom, posing a significant risk to the global semiconductor supply chain. Samsung, a dominant force in the market, produces about a third of the world's DRAM, a crucial component for nearly every modern device. Its memory chips, alongside those from rival SK Hynix, control roughly two-thirds of the global DRAM market and a substantial share of high-bandwidth memory, HBM, essential for AI systems. Samsung's 3 fabrication complexes are central to the AI industrial boom, supporting 12 fabrication lines and an annual investment of $73 billion in semiconductor capital and research and development. The potential strike, scheduled for May 21 for 18 days, could become the largest work stoppage in semiconductor history at a critical choke point for AI infrastructure. Unlike previous disputes, AI hyperscalers are unlikely to absorb such a supply disruption. The dispute stems from labor negotiations. Samsung unions are demanding 15% of operating profit for a bonus pool, the removal of existing bonus caps, and a 7% wage hike. Management has offered a compromise of roughly 13% of operating profit, structured as a one-time payment for 2026, without committing to permanent structural changes. This tension is exacerbated by talent retention issues, with union leaders citing the departure of approximately 200 Samsung employees to SK Hynix in recent months, compounded by a lack of performance bonuses paid out during a recent memory downturn. Previous labor actions have shown the potential impact. A one-day walkout in April reportedly caused a 58% drop in foundry output and an 18% fall in memory fabrication. Industry estimates suggest a full 18-day shutdown could result in potential losses ranging from 30 trillion to 100 trillion won. Samsung has initiated warm-down procedures, scaling back wafer inputs due to the high cost of scrapping partially processed wafers. The strike directly impacts Samsung's competitive position, especially as SK Hynix has recently surpassed Samsung as the world's largest DRAM maker in Q1 last year, largely driven by its HBM dominance for AI. While Samsung has made significant gains in the DRAM market through HBM4 production, a prolonged strike could jeopardize this turnaround trajectory. Financial analysts warn of severe repercussions. JP Morgan analyst Jay Kwon estimates that meeting the union's full demands could lead to a 7% to 12% downside in 2026 operating profit due to increased labor costs, alongside over 4 trillion won in lost revenue from production halts, resulting in a total operating profit impact between 2.1 and 3.5 trillion won in the base case. Samsung Chairman Shin Ji-yoon expressed concern over losing market leadership amid customer flight and declining competitiveness. Meanwhile, the broader economic context includes discussions on distributing the AI boom's gains, with a presidential policy chief suggesting a dividend for citizens, which caused volatility in the Korea Composite Stock Price Index. Samsung and SK Hynix are projected to post around 500 trillion won in combined operating profit in 2026, with a combined corporate tax bill potentially exceeding 100 trillion won. The artificial intelligence boom is creating a stark divergence in returns across the technology stock market, with performance being highly dependent on a company's role in the AI infrastructure build-out. Morningstar data reveals an exceptionally wide dispersion of returns, showing a staggering 133 percentage point gap between the average returns of the top and bottom 10% of tech stocks as of May 13th. This disparity highlights the polarized impact of the AI revolution. Companies supplying the foundational build-out, particularly those in semiconductors and memory, have experienced massive gains, with some prices doubling or tripling in just a few months. Conversely, software stocks, whose business models are perceived as being significantly threatened by AI disruption, are posting losses. Market strategists suggest that the core thesis is that artificial intelligence will substantially disrupt existing software business models, potentially displacing many platforms. However, some analysts argue that current investor fears regarding software displacement are overblown, emphasizing that software companies are expected to integrate AI into their offerings and adapt their models. The top 10% of tech stocks have averaged a 93.3% return this year, largely driven by computer hardware names. The sector leader is memory hardware company SanDisk, which has seen returns soar by 511.4%. Semiconductor companies are also major winners. Intel, for instance, has seen its share price leap over 225%, benefiting from sustained demand for its server processors as the AI build-out progresses. Commodity-oriented hardware stocks are also surging, with forecasts pointing to a significant shortage in memory and storage hardware over the next few years. Storage giants like Seagate Technology and Western Digital are among the top performers, with share prices jumping over 180% this year. In sharp contrast, the bottom 10% of the tech sector has declined by an average of 39.3%. The software industry has been particularly hard hit, with over 75% of the 86 software application and infrastructure companies in the index down, including major players like Atlassian and Workday. Despite the headwinds, some large software firms are weathering the storm. Microsoft, for example, reported better-than-expected revenue driven by AI-related demand. Analysts believe that while investors must be selective, focusing on companies with long-term, durable competitive advantages in AI innovation, the long-term opportunity in the AI sector remains compelling.